Time to check in once again with our Chief Equity Strategist, John Blank, who joins me now to give us a little bit of outlook of what's going on for this year in the market. John, welcome back.
Thanks, Terry.
Are you still as optimistic on the stock market now that we've started the new year as you were at the end of last year when we spoke?
I am, Terry. I am seeing the beginnings, the hints of a change in financial market regime, though, out of the 10-year Treasury. And that is giving us some clues that 2013 might have a little different pattern to its bullishness than the 2012 numbers.
What does that mean exactly?
What it means, Terry, is I think we're entering a period where we've seen the risk premium on the stock market being basically reflated, and we're seeing some of the risk returning to the stock market. But it's also starting to getting reflected in the 10-year Treasury rate as people leave it too. Before, it was just a uniform move towards stocks that had no effect upon the Treasury market. Now it's having two effects. And that's pushing the risk premium down from two places, not one, which is a difference. It tells us that this state of affairs is beginning to compress, and we're moving into more reflation, more risk-taking, but it's going to come at a price now.
Okay. However, is January a time to buy, in your view?
In my view, yes. And the reason I retain a bullish view has nothing to do with earnings, Terry. It has to do with this view that what an economist calls, and what I read about, the reflation trade is still on. Meaning reflating to risk, reflating to valuation is still going on. And I think we're still at the very back end of the recovery of extreme risk aversion that's taken out all the valuation in this stock market over the last 4 or 5 years. So I don't pay attention as much as other people do to the earnings tightness, because to me all that tells me is that there's less risk and uncertainty around what earnings are. Not that they're falling apart or going up or down, but that there's less risk to them, and that's the reflation that I continue to see and believe in.
Okay. Well, in your current strategy piece, your market outlook is what I'm getting to. You're looking for, to support the bull case, 1550 in the S&P 500 by summer.
Yes.
That's pretty bullish.
That is bullish, and here's my point, Terry. Summer 2013 is a reflection of 2014 earnings, not 2013 earnings. Markets move fast.
Yeah.
They move very fast. 2012, remember, was a bullish year. We had a 15% return out of the stock market. It reflected 2013 earnings that are now, as we know, pessimistic and all downbeat. And by the way, they reflated all year. So I think what we're going to happen is we're going to look into a 1550 number as a summer rally looks into a 2014 number that should remain fairly substantial for earnings. Maybe not that much higher, but fairly substantial. Because what we see here is we know the Fed has figured out that they're not going to even consider a movement in interest rates, which means they're not going to consider a tight economy and a back end of a cyclical market until the middle of 2015. So we're 2.5 years away from that, right? What that tells me is that we have plenty of slack in the economy. We don't have to worry about interest rates from the Fed or inflation. And all we have is a late-stage reflation recovery in the stock market to bet on.
So it sounds like you're going to be optimistic for a while.
I am, but I am beginning to modify the risk things that I care about, the things I'm paying attention to. I'm caring more about the interest rates on the long end, the 10-year. I'm very interested to see just what happens here, because this is reflecting in the falling apart of the gold market. And I wonder, as we see stocks, gold, and interest rates, long end interest rates, move around here, we're going to see a new pattern that we haven't seen before. And I'm yet to see enough of the evidence to say to our viewers that I understand it, but that's where I'm looking to understand this market better from that perspective.
All right, well, I'm sure that you and I will be talking about those and other related topics in the months ahead, weeks ahead. In the meantime, you can always follow John's writing on our website, Zacks.com. If you're not there already watching this video, check back often, because John contributes to the website in written form often. With John Blank, I'm Terry Ruffalo.